they're not actually fulfilling needs at every layer of that different stack, whether it's compute, data, models, applications, etc. And that's very important. The reality is conventional markets fall very short in giving people the ability to get that exposure. So that's a real need. I don't want to underplay that.
And that's really the key of what decentralized networks or crypto enables. I think they are like crypto and decentralized networks are more than anything tools for instantiating tightly scoped, hyper optimized market environments for provisioning different types of resources.
That is sort of this new paradigm that we think blockchain can uniquely enable. These elements of these models that are coordinated and orchestrated via these markets. So could you guys kind of paint the picture of the before and after?
How do you verify and create a verification system for trust based on either economics, reputation, cryptographic proofs?
Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Welcome back to AI Supercycle. This is episode 4, our premier open source private AI oriented show presented by Nir, the leader in AI in crypto. Perhaps Nick from Allora is set to challenge that, but today we are going to say that Nir is the leader in crypto times AI, pushing forward with their intents with Zcash recently, as well as just broad adoption for agentic transactions. And they have a very, very cool new private LLM feature set being launched, so I can tell ChatGPT about all my girl problems without Sam Altman knowing. Guys, we've got an amazing lineup. We got Danny from Archetype. We've got Nick from Allora, of course, Rob. Guys, welcome to the show.
Thanks for having us.
Really appreciate it, guys.
Yeah, awesome. Pleasure to have you guys on. Tons of speculation, all kinds of things that are happening in the space. Before we jump into it, Danny's first time on the show. Would love to get a quick intro and tell us a little bit about how you found yourself in crypto AI.
Absolutely. Yeah, it's great to be on the show, guys. My name is Danny Sursock. I'm a partner here at Archetype. We're a New York-based early-stage crypto VC. We're on our third fund, just launched that. And we've long had a very big thesis in terms of crypto's ability to play a critical role in the trajectory of AI over the next years, decades, and beyond. Our view is crypto has a unique ability to impact AI across 3 frontiers, really, around access, around critical infrastructure, and around killer applications. We think we've largely solved that first bucket in a really, really important way. But our focus is now on how do we enable truly critical, mission-critical infrastructure to take AI to the next level, and as well as a new field of killer apps that make use of what blockchains are uniquely positioned to do around distribution, coordination, monetization, and more.
Awesome. Maybe we can start just by opening it up with the current meta, the current landscape, if you will. All of the adoption that we're seeing in terms of real growth in the market for teams that are live, teams that are liquid and launched. There are a lot of the boring stuff. It's what we would call the return to fundamentals, the payments, the remittances, this kind of financial engineering. And we haven't yet seen the real tangible results of crypto AI. So maybe you guys could just kind of help us understand where we are at the stage of development. Is it okay that we haven't seen a lot of real tangible things since the era of reply bot AI agents on Twitter? Generally, where do you guys see us on the innovation curve?
Yeah, Danny, you want to start?
Happy to. I think it's a great question. A critical framing that we use from our side is understanding the difference between speculative assets and solutions. And that goes to that first bucket of where crypto can have an impact on AI, around democratizing access and exposure to the upside of the field. And so our belief is that even though you might look at sort of the capital deployment and the broad market maps of all these different participants that make up what we think of as crypto AI today, the truth is most of that has been launched to solve that first need around giving people the ability to speculate and get exposure to AI. They're not actually fulfilling needs at every layer of that different stack, whether it's compute, data, models, applications, etc. And that's very important. The reality is conventional markets fall very short in giving people the ability to get that exposure. So that's a real need. I don't want to underplay that. But in terms of your question around where the real impact comes into play, part of that is just, look, this is hard stuff. AI in the traditional lens is moving at light speed. We're basically playing catch up in real time to something that is moving so quickly. But the other part is it's taken time to build trust and attract S-tier talent from the AI community. I mean, we have amazing talent in crypto, but we need to bring in some of that frontier talent that comes out of AI. And it's taken time to explain to them the value proposition of crypto rails and blockchains, to give them time to really internalize us as a credible frontier for the development of the future of AI. We're seeing a turning point right now in terms of some of the most interesting development happening at a distributed sense, both in terms of model development, around data collection, to your point, around early form factors of killer apps. I mean, the agentic field of Q4-ish of last year was not terribly interesting, but at least it was different. And so all of that is maturing in a way where, yes, we've solved bucket number one, give people access to the upside of AI in a liquid form. Now we're moving into, let's make a real impact at the infrastructure and tooling layer, and let's drive forward net new applications that are intelligent and on-chain.
Yeah, I agree a lot with what Danny said as well. I mean, like, I think like a core piece of this is that this infrastructure is just difficult to build. I think like we're essentially having to rebuild the entire AI stack in a kind of decentralized form factor, and that's just a non-trivial issue. I think we obviously saw some sort of early networks come to market in some of the, I guess, like more straightforward problem spaces within the AI stack. I think like GPU marketplaces have been around for a long time now and stuff like that. I think we've seen some really interesting progress in the other layers of the stack, like around like data labeling, data provisioning. Obviously, Grass has grown to be really big, other protocols like that. I think we're still seeing some of the infrastructure be built out and be brought to market around like the execution layer of the AI stack, which is like the kind of suite of protocols or networks that enable models to basically run in decentralized environments. I think we'll start to see a lot of those start to come online, gain adoption in Q4, Q1, beyond. Yeah, the infrastructure just hasn't been laid yet. I think agents are probably the most like immediately viable kind of sector within AI. I don't think that's what agents were Q4, Q1 of last year and early this year. I think like we've approached agent development as an industry in a kind of misdirected way. I think we focused on one half of the agent puzzle, which is capital formation. Obviously, tokens are really effective at forming capital. If you create an agent that essentially acts as sort of an autonomous KOL or an autonomous attention seeker with a token attached to it, it doesn't matter what it's doing, it's going to form capital. But once it has that capital, these agents don't do anything interesting with them. And so I think there's a new wave of projects, companies in the space that are building agents in a more productive way that can actually both form capital and then do something productive with it. That's why I think like DeFi is going to be this kind of like de facto environment in which this kind of next gen of agents is going to operate. We've seen some early stuff around this, but I think that becomes the kind of main application space or user space within the crypto AI space. So these things are just coming. I think these kind of cycles to build these things out of launching these things is just longer than sometimes people in the crypto space are happy with. We've gotten used to a bunch of infrastructure existing, it being trivial to just fork a bunch of stuff, making small nuances, and then resulting in this like super fast feedback loop. I think AI and crypto is just a fundamentally new category that needs that initial build out period, basically.
Hibachi. Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire. The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
So Nick, on that frame of thought, right? We've seen the broader kind of on-chain landscape and just general like blockchain infrastructure. We've gone from like, you could call it like chain-centric, where users are using a chain. Then you could say that we went through like this intent-centric framework, where it was like you intend to do a cross-chain transaction, and then you have these solvers filling these transactions. You can even now say that we're moving to like app-centric, where if I just want to use Polymarket, I don't even care what chain or what intent. I'm bypassing all of that. I'm just going to Polymarket. I'm just going to Uniswap or whatever it is. You've kind of thought deeply about this objective-centric AI model and like frame of thought with regards to how we should approach blockchain development when it comes to AI. Is that like a evolution of a previous thought process in a similar kind of model that the broader crypto landscape went through? Or maybe you could just kind of walk us through like what the different like centric models that we've had so far in AI development in crypto, why you think objective-centric is the current, and maybe even what's next.
Yeah, for sure. I think it's a great question. I guess just to start, to define objective-centric, I think it's useful to sort of like examine the paradigm of how we interact with AI generally today, not just within the crypto space, and then we can get into sort of like what the crypto space uniquely enables in AI paradigms. I think if any of us here want to interact with AI, if any developer or company wants to integrate AI into something they're building, they have to do so in a very model-centric paradigm. They have to kind of survey the entire universe of AI models that exist, assess which is the best model for their given use case, and then lock into that model. And models are always changing, use cases and circumstances around use cases are changing. And so this like pretty heavy lift of doing this analysis and then model lock-in is like a meaningful source of inefficiency in how we interact with AI. And it also results in the kind of market structure we have in AI today, where there's this kind of like hyper consolidation around single digit number of enterprises that have built the models that the majority of AI consumers use. And when you exist in a market that has such consolidation, you are essentially excluding massive amounts of resources, kind of hard resources such as data, compute, things like that, softer resources, for lack of a better term, like talent, other models, et cetera. And so it creates this really inefficient market structure. And so the idea of objective-centric AI is, instead of the consumer or the user of AI doing this work of looking for the best model, locking in, doing this continuously and ad nauseum, is you create environments leveraging decentralized networks, not too dissimilar to what we've done with Intents and other systems in kind of the blockchain or crypto space, and then enable users to just specify what they want AI to do and what they define AI doing that thing well is, and then allow these kind of efficient market environments to produce the best output as a function of that kind of objective. And so you remove all of the onus or all of the overhead from users in needing to know anything about the models they're interacting with. Just allow them to specify what they want, and then let this efficient market of models produce that. And this is like very analogous to transactions and intents, like you were saying. Like before intents, the only way any of us could interact with blockchains was by determining what we wanted to do and then walking back a specific set of functions or state transitions we wanted to make on chain to achieve that effect. This is a ton of overhead. It's suboptimal often. We're not the best at pathfinding. And so it results in this, again, consolidation of DeFi protocols, consolidation of kind of environments in which we interact with. When Intents came along, it essentially offloads all of that pathfinding, all of that discovery, to a specialized set of market participants and solvers, such that users could just specify what they want to happen. The specialized market of solvers could then figure out the best path for it. It results in way less overhead for the users. It results in way more optimal path finding for each transaction as it's going through, as a function of it being coordinated by these competitive markets. And that's really the key of what decentralized networks or crypto enables. I think they are like, crypto and decentralized networks are more than anything tools for instantiating tightly scoped, hyper optimized market environments for provisioning different types of resources, whether that's transaction paths, whether that's model outputs, whether that's energy in the case of Bitcoin, compute, trust, whatever it is. And so that's the real meaningful unlock in crypto AI, I think, and where we're going to see a lot of the most tangible benefit in starting to refactor AI in a kind of decentralized form factor.
Anything to add there, Danny?
I think Nick said it incredibly well. And it sort of alludes to one thing that we also really believe strongly here at Archetype, which is there's too much emphasis in almost this lazy take around blockchains purely offering decentralization to AI. And our view is blockchains offer so much more in terms of composability and coordination, the ability to scale critical resource markets that AI needs to go to the next level, in terms of giving agents the tooling, the almost like exoskeleton that they need to be functional. And so there's this incredible amount of dynamism that blockchains bring to the table. And to Nick's point, the important thing is to give people the freedom to sort of think through and express a whole range of scenarios and use cases that they want, and then use blockchains to actually enable and scale those.
Which kind of brings us to this paper that you've drafted and put out around the benchmarks. So I think we've established here the frame of thought for how we should be thinking about basically the intersection of these two industries on chain, and kind of analogized it to this intent kind of world. And Nick, in Allora's design, there are actually quite literally solvers and intents used in this model. But if we're gonna analyze Allora, or we're gonna analyze some of these networks, I don't think that we can look at something like Plasma and be like, oh, look at the stablecoin TVL and the amount of yield on DeFi, and like think about how that ties into the token valuation of a given token or what that network should be worth. Danny, you seem to think that we should have new benchmarks for AI when it comes to this intersection. Maybe you could just give us the 30,000-foot view on what this looks like, and then we can drill into it.
I think you're absolutely spot on. And we sort of frame it as like there's benchmarks and there's evals. The benchmarks, broadly speaking, are what I was alluding to earlier, which is, give people democratized access to the exposure of AI's upside, build critical infrastructure that drives forward the future of foundational work in AI, and unlock net new killer apps. But across every single part of the stack, the evals, what you're alluding to, differ tremendously. And what we've historically done a pretty poor job of is really thinking through what those evals are from the perspective of the stakeholders at any part of that stack and building around them. We typically end up operating in these siloed echo chambers where we build things that nobody really cares for in the real world. And so at any different part of that stack, it'll be different. So for compute, for example, it'll be everything from latency and uptime of GPUs, the cost per token and the ability to generate them fast. It'll be around how can you scale up for latency insensitive, long duration inference workflows. So it's all of these different things that matter at every different part of the stack. Likewise at data, it isn't as simple as just let's throw tokens to get people to supply their private data. You have to think through the market structures around what data looks like, how you build post-processing and really make the data from raw to useful, who you're selling into. How do you think about economics post-selling into and sort of creating a durable, ongoing return of value to the providers of that data? And so the point that we were making in the article is simply that at every part of that stack, there's a set of evals that are very specific and guide whether we're building useful things that will actually create and capture value. And it's very, very important that we as an ecosystem of participants are very clear about what those are and are building towards them versus sort of like the high-level blind approaches that I think we've historically taken in many other parts of the stack.
Yeah, it's usually the hot, shiny thing, gets all the attention, gets all the technical people to kind of flock around it, and we don't really zoom out and think, okay, well, is this thing really going to be useful? And so when you're applying, like, Dane, maybe we could go through just a fun exercise here. Like if you're applying those evals to Allora, right? And you're looking at Allora and you're looking, okay, how do we know this thing is really useful? How do you look at it? What are you looking for? What are the questions that you're asking of Allora, the network? And then we can kind of, come to an understanding and then use these general rules to apply to other projects as well.
I think it's a great question. And there's a few, right? And so first off, maybe to the point Nick was making around the ability to give people the freedom to express a range of things they want to execute on chain and actually solving for it. It's not too dissimilar to thinking about how bridges work today, right? The things that are going to matter to those people are the ability to, first off, express all these different things that they're creatively coming up with, and then actually solve and execute on in a way that is reliable, that is cost efficient, that unlocks net new outcomes that they historically couldn't, whether that's opportunities to trade and be participants in a very sophisticated ecosystem that was previously off limits to them, whether it's around the alpha that they're generating and sort of their actual returns, whether it's around the time that it frees up to them. And so it's around understanding what these people are actually looking for, and then being able to create the evals around that to say, yes, in fact, we are building systems that are delivering on that value proposition. And likewise around the ideas of, broader swarms of intelligence, right? One of the big value props that we have in crypto around, can we sort of scale horizontally to drive more intelligent overall systems? Again, the approach there should be very simple, right? It should be around, first off, looking at the net incremental contribution from any one of those participants, and then looking at overall, is the system getting smarter as a result of that horizontal expansion? And you can use similar evals that you would in a traditional industry where, okay, maybe it's around a specific use case of the overall swarm intelligence that we're using in a specific enterprise context or a retail context or as a gaming or an entertainment piece. But in any one of those scenarios, it's just about understanding what people are looking for. And I think Nick and Allora have been somewhat uniquely positioned over the last couple of years to think very granularly about what actually matters here, and then how do we meet those needs versus sort of like high-level pie-in-the-sky ideas.
Blockchain shortcuts, templates, and widgets launch without friction for builders by builders. Visit enso.build. The future runs on intelligence, creativity, engineering, health, money, productivity. AI promised utopia, but delivered only hype, black box models, and zero accountability. With tons of tools claiming to be the best, how do you know what's real? Introducing Recall Find, top models ranked by transparent reputation from researchers, users, and developers. Test AI skills, curate favorites, and compete to see what works. Don't guess what's good, recall it.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay.
Nick, and so, one of the things that I think that we've been pushing on in this show that is probably one of the evals that we would think about is, we have the general kind of privacy and user ownership when using LLMs and, the organic nature of data sets, prior to using an LLM, these types of things. But one of the bigger concepts is also about verifiability. And so I think one of the evals that Danny, Robbie, and myself would be looking for is how do we guarantee this level of trust when these AI outputs are probabilistic by nature? How do you verify and create a verification system for trust based on either economics, reputation, cryptographic proofs? Like, what is the stack that you think is the best format to guarantee trust for AI outputs, knowing that they're probabilistic? How does Allora approach this? How do you kind of see this problem being solved?
Yeah, I think it's really use case dependent. I think some use cases require different levels of sort of verifiability than others. Like some things will require like ZK verifiability of an output's fidelity, and some will require sort of lower fidelity means of verifiability. How we've sort of approached the problem is in creating a kind of environment that produces, I guess, like economic verifiability, in that we haven't like concerned ourselves as much with this problem of sort of like decentralized execution of models, which I think it goes hand in hand with like more of these kind of hard forms of verifiability, cryptographic, et cetera, of these models that sort of lives outside of the scope of the network. What we've done instead is we've created an environment where the kind of mechanism design of the network ensures that the sort of best responses are being emitted to the ultimate consumers of these outputs as possible. People are rewarded if they're producing good responses as a function of the rest of the sort of network participants and their relative reputation, and they're punished otherwise. And so I think in that you create, you sort of subvert the need for some of this hard verifiability when consuming AI. AI is a non-deterministic form of compute. It's very difficult to verify. There's a lot of like great projects working on that. I think for us, it's been more about how do we create an environment where like one's returns are based solely on how effectively they're able to produce good responses and I guess like trustworthy responses in this kind of environment. So people are emitting inferences on Allora. Those things are being all aggregated together, and then the rewards for those individual kind of model contributors is being distributed based on how useful each of their model outputs was. We don't even care where people are running models on the network. People are running closed source models on the network. The best forms of AI today are still closed source. And so trying to tackle this problem of sort of hard verifiability and also encompassing these kind of closed source models is still, I think, like a fairly difficult challenge.
And I think to Nick's point, actually, evals in many, many scenarios are a good way that you can sort of solve for the same thing that verifiability would. In other words, like as long as you're delivering on what users expect, let's say it's an agentic trading protocol, right? As long as it is unlocking the performance and the other use cases that people expect of it, it doesn't matter if you're actually running the model that people expect you're running on the back end on the exact piece of hardware that you're claiming, or in fact, you've locked a quant in a basement who's doing raw calculations by hand and inputting the trades on your behalf. As long as it's working, people aren't going to care. Where they start to care is, are you starting to deviate from the value proposition that they promised them? And then the questions come into play, like, are you cheating by using lower grade hardware or a less performant model and things like that? Now, of course, that's totally separate from much higher stakes use cases around, let's say medicine or private data and things like that, where verifiability does become a lot more relevant. But I do think for a lot of more general purpose use cases, you don't necessarily need hard verifiability. You can approximate it using the right evals over time.
How do you guys anticipate that we're going to blend some of the principles that are alive and well in crypto and without becoming maximalist and decentralization and that kind of ideology? There's plenty of Web 2 style AI centric principles that we can also apply to as we're kind of building out this sector that's blended of the two. And we kind of get caught up in our ideology in the crypto world, but there's to Nick's point, a lot of these good models are closed source still. They've built this without UX detriments. ChatGPT is super easy to use, these kinds of things. What are some of the principles in Web 2 AI centric SF development? What are some of the principles and the ideas that are shining through now, as I think we're realizing in crypto world? Look, we don't have to be decentralization maxis. Hyperliquid is capturing a lot of market share. People are kind of coming to this realization that it's this practical era. We're building for the real user, and we're kind of leaving aside some of those, the core ideologies. They're still making it, but like we're not maximalists about it. How do we blend these two, and what are some of those principles that we can draw out?
Yeah, I think, and Danny, I'm curious to hear your answer too, but I think we've done like a pretty bad job of this to date. For one, to what Danny said earlier, I agree. I think it's been very tricky to get some of the AI industry into the crypto AI industry. I think like crypto has a somewhat troubled past, obviously, and so that's sort of marred people's perception of the space, and that's contributed to it. But I think in some ways, like ideology is sort of held on this pedestal as I think this like, I don't know, kind of nebulous, sometimes useless thing. I think we operate in a market economy. We make decisions based on like a very core set of functions. So our calculus is very simple about when we make decisions. Am I going to get more value out of using this thing versus that thing? Does this environment uniquely enable me to tap into new types of experiences, markets, et cetera, than this other thing? I think that's where crypto has shined. It's not been in this kind of like religious devotion to a set of ideologies. It's been in unlocking kind of net new venues and net new verticals for people to play with. I think that was the success of like the early AMMs like Uniswap. It opened the floodgates for sort of long tail asset classes that traditional finance couldn't accommodate. We've seen this with the meme coin cycle over the past couple of years. Obviously, prediction markets have sort of tapped into this more efficient and autonomous coordination of market participants and brought over users, not because of an ideology necessarily, but because of a fundamentally kind of new feature that's born from decentralization. And so I don't know if I have a great answer of what principles we should borrow from like the I guess like centralized AI space, because I think what determines winners and losers in this space, in any space, is much more based on sort of fundamentals and like what you unlock for your consumer base, more than it is based on sort of any specific ideology that's attempted to be followed, because often ideologies get left behind in the face of those fundamentals anyway.
Yeah. Danny, then maybe a more like direct way, is there areas where you think decentralization is going to actually change AI outcomes versus just like slow things down for the sake of decentralization? Like, is there a kind of a black and white here that you've carved out?
It's a really good question. Like, and to your point around like what we can learn from Web 2 as part of this other question, right? Like, we most align in theory with like the open source AI community that exists in SF and around the world. The ethos, the mission, I think is very similar. The problem is we haven't approached getting there in the same way, right? In the open source Web 2 AI community, it's still about the efficiency of the systems and how you're going about things, making sure that things work, they are functionally advancing that mission. Whereas in crypto, I think too often we've over-indexed on decentralization at the expense of functional systems, tools, and products. And so for us, the reorientation has to be, okay, we can move towards open source, decentralized form factors, but the mechanisms that get us there have to be very practical. They have to be informed by economic considerations, by technical considerations, et cetera. And it also alludes to another point that we've made repeatedly, which is there's a big difference between decentralized and distributed. And very often in this space, we use the two interchangeably when we shouldn't be. A lot of the value prop that crypto brings to the table in how it can impact AI comes from more distributed form factors than true decentralization in like the old school protocol concept. And so for example, like if we're talking about like data collection at the edge, right? You're more than likely going to have an operator, a centralized operator who's opinionated about the types of data that they need to collect, the ways that you create an application to incentivize different scenarios and reward them, the post-processing, thinking about enterprise sales and how you create economic value around that. But the actual supply side of contribution is very distributed. Likewise, if you think about like a reinforcement learning like network in crypto, right? Like the value prop there can absolutely come from horizontal distributed setup, where you have environmental and verifier diversity that leads to better evolution of more robust, interesting agentic models. But at the same time, you absolutely need a centralized team that is focused on the curation of those environments and thinking about tweaking things on the algorithmic side, what they're actually going to use these models to, how you bring it all together in a way that's coherent. And so the TLDR is distributed value proposition from crypto makes a ton of sense. The decentralized value proposition of crypto can make sense in certain areas, for example, in economic ownership and governance and things like that. But forcing it at those other parts of the stack is what sets us behind, where the open source AI community in Web 2 is like, oh, crypto, you could actually make an impact here. They take a look and they were like, none of this works. We're going to go back to doing what we do today. In order to bridge that gap, we have to actually think through building things that are functionally guiding us in the direction of the mission that we do share with the open source Web 2 AI community.
So could you guys give us a bit of an education here on the way that these models are currently curated and bringing together some of these distributed elements of the stack and different parts of inference? There's kind of a before and after picture here. The before is the way that these larger models are orchestrating these models right now. And the after is basically turning all of those distributed mechanisms into one coordinated market and having all these submarkets. And Nick, maybe you can speak to the markets piece. That is sort of this new paradigm that we think blockchain can uniquely enable, these elements of these models that are coordinated and orchestrated via these markets. So could you guys kind of paint the picture, the before and after here?
Sure. Danny, you want to start off or do you want me?
You started. I mean, you've been building this for years.
Sure. Yeah. I mean, like when we think about like the state of, or like the market structure of AI today, I think it looks like a lot of traditional markets, right? Like there is a lot of overhead that goes into sort of bringing models to market, to sort of establishing some meaningful level of market share in the AI market. And we can talk about just the model sector as well. But like, if I am a company or an entrepreneur trying to bring a model to market today, there's a lot of kind of like expensive, non-trivial steps to get from model development or model conception to value capture. I have to stand up a business. I have to acquire funding. I have to set up a bunch of administrative stuff. I have to productize my model often. I have to find distribution, PMF. There's tons of overhead. It's this long indirect path from sort of the initial seed being planted that I want to come to market with a model, or I've had some useful innovation in modeling, to capturing value from it. What decentralized networks enable us to do is shrink that path to the most direct and sort of shortest path possible. It allows us to go from model development or model conception to value capture just by pointing that model at a given network. That's kind of in the scope of what we're building. This could be many different types of resources, obviously, but like decentralized networks turn any industry into that kind of before and after. Bitcoin did this with energy, right? If I had access, or if any of us had access to energy prior to Bitcoin, it was still like a fairly long and direct path to turning that energy into value. Sell it to a grid, stand up an energy company, et cetera, et cetera. Bitcoin, it creates the shortest path possible of turning excess energy into value just by pointing it at the network. And so we can start to break free of this like material inefficiency that exists in the trad AI industry, these long indirect paths from sort of creation to value capture, by wrapping the market environment in this kind of autonomous and coordinated decentralized network. And that's really the most like impactful aspect of bringing decentralized networks to any industry. And that applies very directly to like the before and after of bringing decentralized networks to AI as well, in my opinion.
Danny, do you see this as a common principle or building technique, bringing this sort of market structure to the AI landscape as a whole? Do you anticipate more projects to follow suit?
Absolutely. I mean, to Nick's point, the whole mission really that all these projects have is like the ability to take from the ground up, a frontier model to market in Web 2 is restricted to a very, very small set of teams that can aggregate the capital, the technical resources, the talent, et cetera, needed to actually do that. What crypto seeks to do, and what it, I think, has the biggest potential to do, is use the ability to aggregate capital and aggregate people and resources and input and data around the world in a way that creates an alternate stack, a supply chain that helps people do that. And it does so in a composable way. I think most of that has been promise more so than actually delivered solutions. But I think we're starting to get a lot closer in having bits of that stack come together in ways that actually, materially make an impact. So like even around just like compute itself, right? Like the compute substrate we have in crypto for anything beyond just sort of like spot or on-demand inference has never been reliable enough to be a real part of the conversation. But there's a lot of projects that have actually made material strides in the last couple of years in terms of building these frameworks where not just inference, but increasingly, reinforcement learning and ultimately like pre-training can be done in a distributed context. And so ultimately, the goal is to replicate the end-to-end supply chain stack that is very closed off and controlled in Web 2 AI. But it's really, really hard because we have to do it at every layer of that stack, and every one of those independently is extremely difficult. Doing it in a very coherent end-to-end supply chain way is even harder.
So then, how do you think just one quick follow-up, Danny? How do you think the capital formation evolves? Do you think it's M&A and bigger AI companies coming in and buying some of these like more modular players, or do they team up, or how do you think this evolves to become significantly impactful?
It's a great question. I think in Web 2, we absolutely will see a lot more consolidation. I mean, at every layer of that stack over the last couple of years, we've just had an explosion in the number of participants and attempts to build companies of them. Most of them are just struggling to reach scale and break out. And so it just makes sense that you'll see consolidation. In crypto, I think where we have the advantage is blockchains give you the ability to hit sort of like sustainable economic scale with a much smaller base of participants. And so I think what's interesting about crypto is not just markets that give you the tools and the resources from a sort of a technical side, but also like the capital to be a sufficient and a sustainable player at a much smaller scale. In Web 2, doesn't work. In crypto, there's a feasible path where a very open and diverse ecosystem of much smaller players around this stack can sustain itself over time because of what blockchains enable at an economic level.
Yeah. So it sounds like the answer to the question of which AI primitive or which of the AI primitives will actually create value on chain. It sounds like we've talked about agents, we talked a little bit about compute, but it really sounds like this coordination kind of problem of models, of data, of incentives. You guys, seem to agree that coordination, like network, if you will, is really the core driver of value on chain for AI.
I think so.
When I think of it from the infrastructure side of things, I think coordination is a really big part of it. But there's also the advantage that crypto has on sort of the application frontier, which is, we're the only place that has spent the last half decade thinking through what is like digitally native rails for the creation, the distribution, the monetization, the composability of content and assets and IP look like. And so when we think about what is AI ultimately going to get used for, I think crypto also has a huge advantage on that front. Everything from the absolute end layer for apps, but also even for the agentic stuff around payment mechanisms, around reputation based on cryptographic primitives for these things, and new capital and credit markets around AI in the wild. And so, yes, I think coordination is probably really valuable on the infrastructure side, but I think everything else that crypto spent years refining and developing and stress testing, that's where we have a huge advantage in terms of actually productizing AI and coming up with net new apps and use cases.
Yeah, I think that's a great point. I think the value capture of AI, the real promise of bringing AI to crypto, in my opinion, is in like moving towards this like utopian state of society where we achieve hyperfinancialization, where every possible thing in society can be turned into a financial market. We've laid a lot of the foundation in that in crypto and DeFi itself, and now we have these like more efficient, autonomous, and hyper composable financial building blocks that can be combined to create ever more and more expressive building blocks. But the people using those, the market participants, are still like quite inefficient, and so there is a fairly low ceiling still on the level of financialization that society can realize. And AI is the most deflationary technology to ever exist. Agents can participate in market sectors, process data sets, and make perspectives and decisions in domains that are incredibly long tail, incredibly niche or esoteric. And so I think a lot of the value is going to be captured in the like rapid expansion of the kind of applicability of markets in everyday society. I think AI agents are going to be the de facto user of prediction markets. They're actually going to make prediction markets like hyper useful across everything in society. They're going to start introducing markets more into like our governance processes, and from local to federal, whatever it is. I think like a lot of the value capture comes from just like unlocking this incredibly proficient net new market participant, and what that means for embedding markets into more and more of our daily lives, basically.
Yeah, I think that trend is accelerating, and as you've mentioned, AI kind of pours fuel on the fire in a way, and kind of enables a lot of that. And I think one of the examples, right, is the use case for crypto, the agentic transactions, and all of the work that's came out the last couple of weeks just on X402 and Coinbase promoting it. And we had Jeremy Allora on the show a couple of weeks ago talking about it. It's been a large growth here that I think people are really starting to pay attention to. Guys, we're coming up on time, but Nick, I'd be remiss to not fulfill the main community question here, which is, what is the state of development in Allora? I know, Mainnet's looking ready for Q4 here. What's the timeline? What are you guys building? What can we expect?
Yeah, I unfortunately can't share a specific date, but everything is ready. And so it should be quite soon, is what I can say, basically. But yeah, I mean, everything's ready. The network's good to go. We're in the kind of like we're working on some sort of final migration steps, and yeah, really excited with how things have been coming along. And we have a bunch of exciting stuff planned for the coming weeks and beyond, basically.
Can you spill any like day one launch partners? Anything that our community can expect?
I don't know if I can do that. I will say we have some, and we'll release some more stuff on this soon. But I will say we have some really exciting agent related stuff coming out around that. So
beautiful.
Yeah, we spent a lot of time building out a bunch of stuff to start enabling millions and millions of DeFi agents to start spawning and tapping into this kind of so it's gonna be
millions and millions of DeFi
coming to a blockchain near you. I hope you have high TPS.
Yeah.
Nick, Denny, guys, thanks for your time. Thanks for the insights. It's been very educational, and just an overall pleasure, guys. Look forward to the mainnet, Nick. I know you're busy, so thanks for sharing some time with us, and great to meet you, Danny.
Thank you, guys. Really appreciate it.
It was a pleasure. Thanks, guys.
Alrighty, guys.